traders, and I kept seeing one pattern show up over and over. If you don't have this, you're going to find yourself stuck in an endless cycle of making a little bit of money and then giving it all back to the market. By the end of this video, you're going to know exactly what separates profitable from unprofitable traders and how you can apply it yourself in your own trading. I had a client called Clayton who was stuck in a vicious cycle. He not only blew every single trading account he touched, but he also drove his business and marriage into the ground. I taught him exactly what I'm going to teach you.
Hey, I've told y'all about the mental side of trading, where if you're in a trade like this, I know I've told y'all about this a lot because it's so true. If you're in a trade like AMD, not only are you losing money, but you're losing sleep, you're losing mental capital, you're losing potentially your marriage. Like it's a real thing, right? It's not just about money anymore. Whenever you're in a losing trade and you decide to stay in that losing trade, it's no longer about money.
In this video. And now Clayton is a funded trader running his own successful business and in a stable and loving relationship. If you're facing a mindset challenge right now in your trading, comment in the comments below and I'll offer you some guidance. Now, most traders, 99% of traders are unprofitable. They make a little bit of money and they give it all back to the markets. And they end up investing years learning how to trade. They invest thousands of dollars in trading strategy education, and the market chews them up and spits them out. And they end up that journey unprofitable, never making a cent. In fact, most of the traders end up losing money. But there's also a small group of traders, the top traders, the 1% of traders who are consistently profitable. They consistently pull money out of the market. They scale up with funding. They get payouts over and over, and they generate money from the markets consistently. And I became obsessed analyzing and trying to differentiate what separates most traders over here and what makes a top 1% trader that is.
This is a journey that I went on too, because I was losing money in the markets. I was trying. I was really trying. Not all of those years I was making money from 2009 to now. So I was incredibly fortunate to be able to work with 5 of the market wizards, and you can see some of the interviews I did with them on my YouTube channel. Just go over to the playlist section. I've got the playlist right there for market wizards, and you can learn along too. So I know exactly what he's talking about, right? The stat is 90% of traders lose 90% of their accounts the first 90 days of trading. I blew up my account twice before figuring this out. And it sucks, right? It sucks to lose $200,000 trading. But at the same time, it's like, I want to make this work. I know I have to make this work.
Is consistently profitable. And that's exactly what I ended up showing Clayton. That's exactly what I'm going to show you in this video. Now, what most traders do is they learn a new trading strategy. They start to trade and they make a little bit of money. And when they start to make money, it goes to their head. They feel proud. They feel overconfident, and they make profit, and they go tell their friends, they go tell their partner about how much money they made in trading and how good it is. They go tell them they can.
I'm going to love this channel. Oh my gosh, I know it. And so you've been there too. You and I both have, right? When you're making money, you're so excited and you want to tell everybody about it, right? And in fact, little disclosure here. That's why we have the share your big wins section in Outlier, is because when you're riding that high of just winning something, we want you to tell us, like, what did you do to win? How did you use Outlier to win? That's why we do that. But at the same point, right? When you reach that point, I shouldn't say you, I developed periods of arrogance where it's like, I'm untouchable. And then I would make poor decisions, and then I would end up losing money, right? I would make money and then just give it all back. I would make money and then just give it all back. This is exactly what happened to me.
Community, and everybody praises them. And what happens is they start to become confident and they start to be overconfident. And then eventually they start to feel invincible. And then they get to a state of pride.
I'm telling you, I have not watched this video, but I have experienced exactly what he's talking about.
And self-exaggeration up here. This is, by the way, the boom part of the boom and bust cycle, where they then think that they're invincible. And when they feel they're invincible, they minimize the risks in the market. They forget the risks in the market, and
they decide to dig themselves in because they know better than the market, right? They make YouTube videos talking about how it has to go up from here, right? They make YouTube videos where 150 is the dip, right? I'd laugh if the answer is buying the dip. Yeah, there are people who reach that point and they're like, oh, just buy every dip because it always goes up. 150, 140, 130, 120, 110, 108. You know what I'm talking about. There's lots of people who will tell you all day long that, oh, I won on this last trade, so therefore I have to win on the next trade. And that's one of the key lessons from trading in the zone is every trade is independent of the next one. There are never going to be the same 2 market participants to drive whatever the price is doing on any individual trade. You could have the exact same setup on the exact same day of the year and have 2 different people trading it and you're going to have two different results, because every single trade is unique. There's no exactly repeatable pattern.
Deviate from their trading plan. They start forcing crappy trades onto the market, thinking that any trade they place, they're going to make money on. And then what inevitably happens, because they're deviating from their edge, from their plan, is they start to take loss after loss after loss after loss. The market humbles them because they don't know how to humble themselves and stick to their trading plan. And eventually they take...
Dang, I'm going to love this channel. I'm already going to rank this a 10. Yes. How many times have I told you? How many times have I told you here or on the Discord, do you have a trading plan? If not, make a trading plan and know where you'll get out before where you get in. Before you get in, know exactly where you're going to get out. And you probably think, well, I don't know where I'm going to get out. You know where your risk is. You know how much risk you're willing to take. And then once you have that plan, you have to follow it. Market wizard Larry Hite, the first $1 billion hedge fund manager that I worked with, he told me this. He said, if you have a trading plan and you can't follow it, you have invalidated everything. If you ever had a strategy, it is invalidated. If you had a trading model, it is invalidated. If you can't follow your own let me stumble over my words there. If you can't follow your own trading plan, it is meaningless to even have one.
So many losses that they go on the depressive swing. This is elation, this is depression, and they start to feel really down and sad, and they start to question everything. The self-doubt starts to kick in, the fear starts to kick in, and eventually they get to such a low point where they say to themselves, you know what, something has to change. So they go do some more testing and they refine their plan and they stick to their trading plan and they ensure that every single trade they take is to the T, part of their high probability setups in their trading plan, because they're at the lowest point of the bust cycle here. And then what starts to happen is, because they're sticking to their trading plan now, they start to take win and win and win and win and win. And then when they're above break even in results, they have a sense of relief. And then they stick to their trading plan. And again, they start to feel proud and overconfident and invincible. And they go tell all their friends, they go tell their partner how much money they're making. They go to their job and they now resent their job because they think they can make way more money trading than they can with their job. So they start thinking about quitting their job and going full time with trading. And they're in this state of invincibility again. And when they're in this boom state, again, they go away from their trading plan. They feel invincible. They minimize risks in the market. And then lo and behold, they start to take loss after loss after loss after loss after loss. And then the cycle repeats. And guess what? These traders go a year or 2 years or even more, 3 years, and they never make money. At the end of that 3 years, they end up break even. In fact, most traders end up losing money because they throw in the towel on the bust cycle. So this is...
Man, this is so good. This is so good.
Most traders' mentality. This is the 99% of traders who stay unprofitable and inconsistent. They go on the boom and bust cycle, and the boom and bust cycle is a reflection of a poor psychology. It's a reflection of a trader who doesn't know how to manage themselves, so they run by the market. And
that's why when I go through my trading plan every afternoon, when I'm going through it, right, I'm going through slide after slide, what I do, I'm looking for the market, I'm looking for the market breadth. And then if the master key's locked up, I don't care. I have no desire to look at anything else because it's not going to fit my trading plan. And then I'm, if it does set up in the master key and I go a little bit further and then something doesn't run through the scanner, I don't care because it doesn't fit my trading plan. And that's the mentality you have to derive, which is, you know what? I really don't care about everything else. If it does not fit my trading plan, it is meaningless to me. It is just noise out in the ether. And you have to decide how much of that noise you're going to listen to. JG says, this is me right now, right? After yesterday, I'm so glad I saw this. Yeah, for sure. Andrew says, I'm new to this just over a year. I must say that I watched a lot of YouTube videos like walking through a minefield. I think I was fortunate that things worked out despite a few scratches. Yeah. Make a trading plan and throw away all emotions or feelings. Exactly. I knew what you meant, David.
And they're in a state of pride. They're not able to manage themselves. So what they do is they're now thinking that they can just force ideas into the market, and they end up taking losses. They have to be humbled by the market because they don't know how to humble themselves. Okay. So this is where most traders sit, and this is where most traders will trade from and never make money at the end of their journey. It's very important to understand this. Whereas the top 1% traders that I analyzed, this is exactly their mentality. They know how to break out of this, and they're consistently pulling money out of the market, consistently compounding their accounts. And in fact, they oftentimes have quantum leaps because they pick up funding from $10,000 personal accounts to $200,000 funded account to $1 million in funding to beyond that. So they have these quantum leaps in capital and making money where 1 month they're making $1,000, the next month they're making $20,000 because they've 20 times their leverage, and then now they're managing millions of dollars, let's say from 200,000 to a million, and now that same process of making that percentage, instead of making $20,000, now making $100,000 a month. So they have these quantum leaps because they understand this very simple principle. And what that is, you can see that these traders still have a boom and bust cycle, but the time in which it takes them to go through the boom and bust cycle is much shorter. And the way they're able to do that is because they're able to manage themselves. So what happens when they take a win, they may feel a little bit elated, they may feel a little bit proud, but they have tools and a mindset and a decision-making matrix to be able to ground that. And they know how to manage themselves so they don't need to be managed by the market. So when they go into a state of pride, they have a mentality to better humble themselves to get them back to their trading plan. And that happens very quickly. That happens within hours, as opposed to this trader who takes months to humble themselves, and they don't eventually humble themselves, so they need to be humbled by the market. This is why the swings are so long over such a long period of time, and they stay flat, they stay inconsistent. Whereas the top traders know how to humble themselves very quickly when they take wins, and I'm going to show you how to do it.
I was on the other screen, I was trying to show you my returns from last year, but I don't know why Google Finance is breaking right now. But I had a 91% return in 49 trades, and it looked very similar to this right here. And I don't know why Google Finance is like having a total panic attack. But I mean, a lot of these months I had nothing going on, absolutely nothing. And then 14, 12, 30% gains in a single month, 8%, nearly 7%. And then only in November did I have a losing month. Now, again, this doesn't help that the data is broken at the moment for some reason coming out of YouTube or Google Finance. But like this is what it looks like when you have a trading plan. I have lived it. I've experienced it. I know what it's like. And you have to block out all the noise. Elsewise, you're going to be on this side. But if you follow your trading plan, you can have gains that look like this. In fact, if you follow me, you can see throughout the year how my gains are going to turn into this. Now, it doesn't all happen at once. Here's the other thing too, and he may discuss this. There are going to be times where you don't have anything. You have nothing. And I wish that chart was pulling through because that was really useful. And you're going to be flat for a while. And then you're going to take a step up. It's like going up the stairs, right? There's level times, and then there's times where you pop up. Level times and times where you pop up. That's how the game is played. And my January, my returns are like 1.2% so far for the year. Okay, that's fine. But you know what I didn't do? You know what I didn't do in January? I didn't lose money. I didn't lose money. You know what I haven't done in February? Because I haven't traded a single trade in February. I haven't lost money. And I know a lot of people have been getting suckered into trades like this because people on YouTube are saying, oh, it has to go up from here. And they're losing money hand over fist. Just in January and February, let's go to January 1st or January 2nd here. Not even the peak right there. Just in January and February, AMD's down 11.6% in 2 months. 11.6% is right around 10%. And a 10% loss, you have to gain 11% to get back. Now, imagine you got into the stock, even on the peak up here. You're like, oh, I have to buy it at the peak, right? Now it's down 17%. 17% is close to 20. You need a 25% gain to get back to break even. This should open your eyes so much. Man, am I so glad I found this channel. I'm gonna give it 11.
Do that in a second. And when they take losses, they know how to build themselves back up. Instead of being in this state of fear, they know how to build themselves back up to a state of being confident and sticking to their plan. And when they get a little bit proud, they know how to beat themselves up a little bit mentally so that they can get back to their trading plan, to that state of equilibrium. So they're not too proud, they're not too overconfident, but they're sticking to their plan. They're reminding themselves of the risks in the market. And when they're able to equilibrate themselves and manage themselves, they're able to just stick to their trading plan. And as a result, have consistent profitability, reap the rewards of compound interest, and reap the rewards of the access to prop firms every retail trader has access to nowadays. So how do you actually transition? What's the one thing? How do you go from inconsistent to consistent? How do you go from being on the boom and bust cycle to consistently pulling money at the market? Well, this is exactly what I found from analyzing the top traders. This is exactly what I taught Clayton. It's exactly what I teach every single one of my students. And what they do is after a trade, if they're in a state of, or if they take a win and they're in a state of pride and self-exaggeration, feeling really, really good about that win, instead of letting those emotions get to their head and promoting the state of greed, overconfidence, which what that makes you do is deviate from your trading plan and force low quality setups into the market, which inevitably ends in losses in the bust cycle. What they do is they immediately humble themselves. They immediately remind themselves of their shortfalls, their downfalls, the risks in the market. So for example, if I was to take a win in the market, I would say to myself, okay, Pat, great win. You stuck to your trading plan. You got rewarded for that. Okay. But don't forget what happened last time. Don't forget that last time when you took a big win, you deviated from your plan. You ended up taking 3 or 4 unnecessary losses from the market because you felt proud and overconfident. And I also would remind myself that I'm just a small fish in a big pond. Who am I to think that I can come back and replicate that? So I remind myself to ensure that I'm always sticking to my trading plan. And also remind
I think that's fine. I think that's a great way to do it. The way that I go about it is I'm only looking at what's on my plan, and I'm only following the steps because my steps are written out. I'm only going through my steps. And if it doesn't fit, I just have to not care. I don't care. I have no FOMO, zero FOMO right here. Because I know I'm going to make money, but I don't know when I'm going to make money. That's where FOMO comes from. When am I going to make money? I want to make money faster than you. Okay, go for it. I have no fear. I will make money. I just don't know when. So I have no mo FOMO. And that's the mentality you have to take to be successful in this market. I'm in that first dip in the chart. I've been fed up. I've been up and felt great, and now I'm down trying to get back. Yeah, let me ask you this, Justin. You don't have to answer if you don't want to. But when you were up and you felt that high and that elation, did you then start making trades that you wouldn't have otherwise? Maybe so. No. I see where you're going with that, Tony. No. Do not YOLO into anything. No. Jarrett here. Been watching your channel for a month now. Your approach of you don't have to stay in a stock and don't fall in love with the company, as well as only price pays, has been eye-opening. You're welcome. Oh man, my bullhorn is in the other room. I had soccer practice last night because I'm helping coach 9-year-old soccer practice, and it's with our sports bag. So there will be no bullhorns today, unfortunately. Might throw a monkey hammer around, but no bullhorns today. Problem is that if your plan sucks and you lose 50 in a row, then you're finished. Yes, and I'm really glad you brought that up, Yannick, because if you get to the point where you've lost 50 trades in a row, you probably should have at some point stopped, evaluated those trades, and then looked at those and said, okay, why did I lose? What can I change between trade 45, or I'm sorry, maybe more like 5, between trade 5 and trade 6? Test it out, see if it works. And you could paper trade. You don't have to trade with real money. In fact, great story. When I was in the process of blowing up my account for the second time, I remember we were driving down the road. My wife was driving, which she never does. And we're driving on the Dallas North Tollway. And I'm in the passenger seat, and I look over and I'm like, listen, I got to tell you, I blew up my account again. And I'll never forget this because she swerved the car. She's like, what did you just say? What? How dare you? And she looked at me and she said, can't you learn to trade with fake money? And I was like, oh, yeah, I could paper trade. That's actually a really brilliant idea. Maybe I should do that. So if you're going on a losing streak, just take a couple minutes, maybe a couple of weeks, maybe a month to figure out what went wrong, what you can do to change it. Try it out on a paper trade where you don't have to risk anything. See if it works for you. And if it does, and if you're confident with it, build it into your strategy and then try it on the next one. See if it works for you with real money. That's the approach you need to take in this. There's no rush. There's never a rush to trade. Never, ever, ever is there a rush to trade. But if you're losing 50 times in a row and you haven't stepped out of the market to say, what am I doing wrong? The problem is not your strategy. The problem is you. I'm not saying you in particular, but if you lose without taking that step out of the market and saying, what am I doing wrong? What can I do better? The problem was never the strategy. The problem was you, my friend.
Myself that I hadn't even accomplished 10% of the goals I want to accomplish in my life. So who am I to be sitting here and, in my glory of making a little bit of profit on this trade when I have a lot of work to do? And this one single trade is nothing compared to all the things I want to accomplish. So I humble myself in that moment, not to beat myself up below this state of equilibrium, but to get myself back to that state of equilibrium so I can walk away from that trade being grateful for the profit I made, but also with this strong reminder that I'm not done yet. And it's important to get back to my trading plan, get back to my proven processes, because I don't want to deviate from that. And I do that after the trade so that coming into the next trading day, I'm not all proud and overconfident forcing crappy trades. And if it was a loss that day, I'm lifting myself. I remind myself that, you know what, it's not that big of a deal. How much you've learned as a trader, where you built yourself up to at this stage of your trading career. So I remind myself that it's not the end of the world. And I remind myself that every loss is a great reminder of the risks in the market and the importance to stick to my trading plan. It's like when you touch a hot stove, you get a little burn, and it's a nice reminder that that's dangerous. So whenever I take a loss in the market, I remind myself of the importance of sticking to my plan, the risks, the true risks in the market, and the importance of sticking to my proven processes. And it's a nice little humbling experience and a nice reminder of the importance of sticking to my proven processes. So I don't take losses poorly, but I have a process to be able to lift myself. And I don't take wins and I don't let them get to my head. So I have a way to get humble myself so that I can be in a state of equilibrium and balance. And every time I come to the market, I can just ask myself, does this trade align with my trading plan? And if it does, I can clearly make a clear judgment decision in that moment, not clouded by greed, not clouded by fear, but I can see that, yes, this trade aligns with my plan, I'm going to take it, or no, it doesn't, I'm not. Okay. So this is a very important thing to do after you take a trade. And then on top of this, a continuation of this is you then have to come to the next trading day. And before your trade, you have to remove that anchor. So this is exactly what I teach in that free Bulletproof Your Mindset course 2.0. If you don't already have that, make sure you click the link in the description or the first comment. This is a completely new and free tool that I've
Honestly, it'd probably be worth your time to go click his link. I never promote other people's links, but in this case, I think it might be worth your time.
created recently. I made it even better. I've made the tool even more powerful to help with your trading. And what that tool is going to guide you through is this very powerful process that the top traders do. This tool helps you emulate the mindset of the top traders. What it's going to do is it's going to help you identify your expectations before a trade, these anchors you create in your mind. It's going to help you ground them, and then it's going to help adhere you to your trading plan. Because the only reason you get really elated after a win is because in your mind prior to that trade, you had an expectation of something. You're thinking that that trade was going to give you all these things, and it did on that individual trade. You get really elated and really happy about that. Or the only reason you're really pained by a loss is because you had an expectation the market was going to give you something, and it didn't. It's an unmet expectation.
Oh, I'm glad you mentioned that. The other day I discussed having a trading plan. It's like driving from Dallas to Disney World, right? I'm going to travel east down along the coast, and then I'm going to, turn south into Florida, head over to Disney World. And when I get there, I'm going to be super stoked, right? My expectation is to get there. But along the way, I'm going to encounter, an infinite number of exit points, an infinite number of places that I could stop, an infinite number of Buc-ee's that I could stop at, right? And during that time, I have an infinite number of choices. Will I take an exit and turn north and go up to Minnesota? Or will I get a flat tire and then decide to turn around? You've got an infinite number of choices, just like you do in the market. But having the trading plan is basically the map to say, from Dallas to Disney World, I know exactly how I'm going to get there. And if I have a flat tire, I'll pull over, I'll fix it, we'll move on. If I take a wrong exit, I'll get off the wrong road and I'll turn around and I'll get back on the right road. And you can get to your destination every single time because you have the map. Now, just because you have a map doesn't mean every single time you're going to have a winning trade. The map is to tell you what to do in any situation, right? And that's why my slide deck is the way it is, right? I'm looking for any situation that could tell me I need to abandon ship. I need to stop this trip now. But if none of those things occur, I continue to let it run until it reaches its termination point. And you need to know where your termination point is, right? You can't buy a stock. Let's go to AMC. You can't buy a stock, go from AMD to AMC. You can't buy a stock and just expect it to moonshot, right? There's still so many people holding these AMCs, the GameStops, looking for the MOAS, the mother of all short squeezes. You can't buy a stock and say, okay, I bought the stock. Am I a millionaire yet? And like a week later, am I a millionaire now? And a month later, how about now? Am I a millionaire now? And you just keep having that mentality of like, I bought the stock, so millionaire time? You're shopping for Lambos, looking at mansions. That's not how the game is played, right? Yeah, there was a giant short squeeze right here. But that doesn't mean when you buy a stock that it has to go to the moon. And even if you say, this stock has to go to the moon, even if you're a YouTuber who's got the clickbait thumbnails, who says this stock has to go to the moon, and it doesn't, you can still get out. Whereas those people are going to be holding on to bags like this. They will be the bag holders, and you can watch on the sidelines and laugh at their Schadenfreude.
So when you go in and before you trade, you remove these anchors, you remove these expectations. Then after your trade, you dampen these oscillations of being happy when you win, sad when you lose. And remember, this is what I was trying to show you over here. The top traders are doing. They've dampened these oscillations, so they just stick to their plan and they build consistent profitability. Whereas most traders just swing wildly because they're really, really happy when they win because it's met their expectations. They're really, really sad when they lose because it's unmet expectations. They're wasting an enormous amount of energy.
Where I was going with the expectations thing is don't have an expectation. Don't have an expectation. And the expectation is those profit targets that people want to put on the chart, right? Profit target of, hey, you know what? AMD is down at 107 today. My profit target is 120. And if it doesn't hit that, you have the unmet expectation. Whereas a pro trader, he says, I have no idea where it's going. Right? Like hymns. I have no idea where it's going, but I'm going to let it go until I have an exit signal pop through, and then I'll get out. I don't have an expectation in the trade. My expectation is not outcome based. My expectation is process based. My expectation is I expect to follow my trading plan. My expectation is one of these is going to happen. That is my expectation. One thing on this list will happen. Hands down, no matter what, something on this list will happen. And when it does, I'm out. That should be your expectation. Your expectation is something's going to happen to trigger me to get out. I will get out at that point. I feel like you could add that one thing to it. No expectation of the outcome. Expectation is all about the process.
The top traders, before they trade, they are aware of their expectations and anchors. They ground them. They stick to their trading plan. Then after a trade, they humble themselves if they win. They lift themselves if they lose, so they get back to their trading plan. So make sure you download that Bulletproof Your Mindset tool if you don't already have it. That's going to help you transition from an outcome-based trader who's inconsistent to a process-based trader that is consistent. Now, if you're getting value from this video, make sure you like it. It just
I'm going to like the shit out of it right now. Man, what a great video. What a great video. 10, 11. Like this one's going to break the scale to me. What are you going to rank it? By the way, I forgot to introduce myself. I'm just some random guy on the internet. But my actual name, my mama gave me, was Christopher Ewell. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009. And this is where we save time, make money, and start winning with less risk together as a team. Now, I want you to rank this video. You can go over 10 if you feel like it. You can go over 10 if you feel like it. We're giving it 9s, 9.5, solids, 10s, 9s, 10, 12, 9. Yeah, legit. This was potentially the best video I've ever covered ever. I give him a moon 10. Yeah, I mean, Sarah's got it right. Another girl. Shane gives it a 10. Dude, I'm telling you, like he's off the charts. He's gonna be like up there. We're gonna have to like develop his own tier. This is the difference. What we just discovered, or what we just discussed, is the difference between the best and the rest. Now, you can choose to be like the rest, or you can choose to be like the best. The choice is yours. The choice is yours, and it is every single day. We have an infinite number of choices in the market. What are you going to do with those choices? That's the real question. Let's continue on here. I actually want to look at some of your stock picks. Throw them in the chat. Tell me what you're looking at right now. We'll take a look at a few of them in the trending stocks section. Don't forget only price pays. All right, just don't forget that. No, I guess I don't have my bullhorn. So let's look at some stocks. What do you got in the chat? Yes, this is my government name. Tesla. Trifox wants to look at Tesla. Now, I always want to preface Tesla because I'm a Tesla bear right now. I'm a Tesla owner. I own a Model Y Performance. It is sick. Nate has seen it. In fact, the other day, so it's so brutally fast. Like the way to describe how fast it is brutal. 3.5 seconds, 0 to 60. I thought sounded really cool. I couldn't wait to do it. So I wasn't going to get the Model Y long range. I wanted the Model Y Performance. And the other day, I kid you not, I can't keep it in sport mode. Sport mode is so brutally fast. So I keep it in chill mode 100% of the time. The other day, I was in a hurry and I was like, I'm going to put it in sport mode just to be cheeky and drive around in sport mode. And I'm at a stoplight and then I push the gas as if I were in chill mode. And it launched me and it scared me. That's how fast it was. I was unprepared because I had forgotten just how fast it was. So I am a Tesla owner, but I wouldn't own the stock right now. You can have a fantastic product. You can have an amazing company, but this is a stage 4 downtrend. Right. Let's talk about stages real quick. In fact, it was really cool to see when the video that I made with Mark Minervini the other day, we discussed specifically in that video stage 4 down, or 4 stages of the market. Right. You've got stage 1, stage 2, which is climbing the wall of worry. It's not the slope of hope. I've messed that up. You're climbing the wall of worry because you're worried if your stock is going to work out. Getting to the top up here is stage 1, stage 2, stage 3 is where the moving averages start crossing over. Stage 4, that's the slope of hope, because you just hope that the stock is going to go back up. Please, oh please, hope that it goes back up. You have the anxiety, denial, and panic, and then it gets down from stage 4 back into stage 1 again. Right. There's your stage 1, there's your stage 2, there's your stage 3, there's your stage 4. I don't know how far it's going to go down, but Tesla's in a stage 4 downtrend, and it's not even subjective to me. Let's look at CRWD. Let's look at CrowdStrike. Let's pull up CrowdStrike over here, CRWD. So CrowdStrike, whoa, man, what a sell-off on CrowdStrike. What is this from the high? Geez, a 15% sell-off here. Let's look at Outlier. Outlier got that sell signal a few days ago. Okay, the sell signal came on February 20th, which was this candle right here. So that's also where I would have gotten out. Now, granted, the Outlier data and my plan are not the same, but that's where I would have gotten out, because it would have closed right at / under the 10 EMA right there. And since that point, it's down 11, nearly 12%. So CrowdStrike is not one I would own. I wouldn't buy this with your money. John wants to look at KDP. See, that's the difference here, right? Let's look at those two that we were just talking about. Recently viewed. Let's go to CrowdStrike, right? You've got an exit signal. And here's the other thing too, is if you miss your exit signal, if it's just like driving down the road, if you miss your exit signal, if you miss your exit ramp, like, you got a lot of work to do at this point. Now you got to get off further down the road and try and swing back and make back those gains that you had already lost, greater than the exit signal here. That's exactly what you'd have to do to undo having missed the exit signal on any stock. But KDP, like, that's what you want to see, right? 10, 20, 50. Let's look at KDP over here. Let me ask you a question. So in the chat, I want you to put the letter N for no, I don't find looking at these stocks useful at the end of these episodes, or a letter Y as to yes, I really do like how Chris breaks down these from a objective perspective. So N if this is not useful to you, Y if you do find this useful, because I don't have to do this. I thought that this would be good content to do each day. Go through some of your picks like that and look at them objectively and see how they're doing. One thing I do see on KDP, which is what I was mentioning earlier, when your sector constituent greediness is going up and your stock's greediness is going up, you can have big moves like this. This is what you want to see. So got the buy signal here on January 29th, just heading to the moon, it looks like at this point here, right? And so talking about those expectations, I don't know. I wouldn't have an expectation in this. My expectation would be, I have a list of reasons to get out, and I do expect at some point one of those to be hit, and I expect to get out at that point. But in the meantime, I mean, it could run up here to this order block, which has got another 8% to go, and that would be cool. Or it could stop dead in its tracks right here. Or it could turn around and close under the 10 moving average, right? Any one of these things could happen. And I expect something to happen. And then I'll get out. But I will never sit and wait and say, I expect it to hit a certain price target, because then you're really going to F up. Okay, tons of Ys. Very cool. I'm glad. Okay, thank you. I appreciate y'all with that. There's so many Ys. All right, y'all are awesome. You guys are the best. Dr. J wants to look at J and J. Let's look at J and J. All right. So Dr. J, here we're going to do a little order block lesson on this one. Okay. Good call. Let's pull up outlier. So this order block right here was established back at September 4th. Now, thanks to Yush earlier, we know that order blocks are not actual live orders sitting on exchange. They represent historical areas of significant buying or selling by institutions. So this area represents significant buying or selling by institutions. Yush, that's a really, really, really good way to describe it. Just 2 sentences. Thank you for that. So you can see back in August, it was established and actually broke down, then back in, and then down, and then back in, and then August of 2024. Yep. And now it's come right back into this. Now, for this is a big red flag for me personally. When I get a stock that pulls up into an order block, I change the plan a smidge. This is the only time I day trade. Only time. I would change it to a 5-minute chart. So change to a 5-minute chart. Actually, before I do that, let's mark it on the chart where that order block is. 164.83. Change it to a 5-minute chart. So here, we've crossed over the 164.83. Remember, that's where the order block started. And I'm looking for one thing to happen. I'm not having an expectation. I'm looking for a reason to get out with no expectation. If the 10-period moving average does not cross under the 20-period moving average, I would hold until the end of the day, and then close at that end of the day. Close at the end of the day, or day trade using a 5-minute chart. Wait for the 10 to cross the 20. If it doesn't, I guess I didn't. If it doesn't ever cross back, I would still close at the end of the day because order blocks can be tremendous resistance, overhead resistance. But if it does cross, that is your time to get out. So here, imagine that J&J crosses, and it could happen in an hour. It could happen 6 hours from now. When that 10-20 cross happens, that is my exit signal to get out. So as of right now, the 10 and 20 on the 5-minute chart are both pointing north. As long as they're pointing north, there's a chance that they might not cross. So Dr. J, I hope that works for you today. If you are in J&G right now, I assume you were. That's why you asked. Now, outlier on here, let's go up in here. So this one has a lot of fear that's evaporated, starting to get into the greed. You see the buy signal came on January 17th, and it's moved up quite a lot since then. But the healthcare sector is getting less greedy, more fearful. So that's another red flag to me that while it is looking really, really great right here, I personally would be looking to take profits today. So Dr. J, really great example. Thank you for that. Rick, you can get the Discord invite, but getting the outlier free trial. There you go. At D says, totally agree. Maybe choose one from the daily bull list. Yeah, why not? Let's do that. So let's go over here. And actually, what I'll do is I'll run my scanner. I would rather look at that. So inside of Outlier, you can set all the different things that we talk about on a daily basis, like your heat maps, your overlay indicators. Let me change over to my bullish screener. Now, in the afternoon live streams, when I am trading, this is where I start, right? When the market breadth is lined up with the market trend, this is where I go next, is my screener here. So we could look at something like AKRO. And we just got the buy signal today on AKRO. Let's look at the chart. So this is the daily chart. You got your 10 over the 20, price over the 50, but I wouldn't take this one. And here's why, right? I still have my own rules, but it's under the prior day's low. When it's under the prior day's low, I'm not interested. And it's also under the 10 moving average. Another reason I wouldn't be interested. Right? Just because it comes through, that doesn't mean that it's an instant buy. Right? Again, you've got the healthcare sector is getting more fearful, where this one stock is getting more greedy. So that's how I would look at it. JG wants to look at Juniper. JNPR. And let's go over here to JNPR. JNPR. So you've got your 10 under 20, price under 50. This is a bearish trend. Now, we actually have double bullish order blocks right here. You got a big one, and you got a little one built inside of that. So it might have a little bit of support right here. if we go over to outlier and then zoom in, here the greediness is still pretty greedy. Or I'm sorry, I totally got that backwards. The fearfulness is still pretty fearful, even though it's come up a smidge, still pretty fearful. The sector is getting less greedy, more fearful. So Juniper actually looks like a short opportunity to me, but not inside of this order block right here. Gatberg, free computer training. Let's go. Let's go to Verizon. Look at that. That's what you want to see. Again, another order block here. So my order block rules would apply on this candle. You've got, looks like a triple. 4. 1, 2, 3, 4 order blocks have set up right here. I absolutely would be very, very cautious at this level right here. And then Rob's going to be our last one, SNN. Okay, cool. So this one bounced right up out of an order block. If it closes above this point, this big purple orange block, or not orange block, order block will go away. You got your 10, 20, 50 pointing north. Looks like it already has earnings. If it does continue on, you've got about 5% until the next order block. But keep in mind, you want to look for 3 candles to tell you if it's a gap and go or a gap and crap, right? A big move up like this could be great, and it could be the start of something new, or this could be the beginning of the end, and it comes right back down and round trips. So listen, I really want you to know that I am so stoked that I can be a part of your day, right? Tell me again what you're trading in the chat. Always let everybody know, because only price pays, right? And be sure to come back tomorrow, where we'll help you save time, make money, and start winning with less risk together as a team. YouTube is going to pop up a couple recommended videos. I recommend you watch one of them, and I also recommend you have a fantastic day and come to the live stream this afternoon. We'll talk soon.